Hello and welcome to this week's Market Outlook webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday 8th of March at 12:30 in the afternoon. This is a webinar that we do every week, and we're changing it up a little bit for this week, because what I'm going to do for the next few weeks, these webinars only run for half an hour, and we normally look at lots of different markets. But what we'll do for the first 15 minutes is talk about some sort of trading strategy, trading approaches. Then we'll apply that to some markets I've pre-selected that look pretty interesting. So I've got about 1, 2, 3, 4, 5, 6, 7 on my list. So we're going to look at 7 markets that I think are worth keeping an eye on in the next few days. But we'll start off looking at some strategy. So you've got the risk warning there. I think you've had enough time to read that now. So let's just flip over and make a start. So what we're using Aondo's platform, Trade Hub. So Aondo are known for social trading, but where you follow other traders and you have their trades copied automatically. But you can also, if you want, place your own trades. There's the option to have like a self-directed trading account as well. So I'm using their platform for this. I thought what we'd start off with, we're going to talk about the RSI today. For those of you who've attended these webinars in the past, you might heard me talk now and again about the squiggly lines that we see at the bottom of charts. And in the last 20 years, thanks to the evolution of the technology, there's a whole host of different things you can add onto charts. If I go to this drop-down list at the top, here we go. So here's our massive list of loads of squiggles that we can add to the chart. But I think one that has stood the test of time is the RSI. And the RSI is a relative strength index. And what it is, it's the relative strength of the market relative to itself. So it's not the relative strength of, let's say, BP to the FTSE as a whole, how has it performed. It's really looking at how strong is this market today or this hour compared to how it has been over previous sessions. So what I'm looking at here, because it's a market that's been really weak in the last week and a half, really, it's the pound against the dollar. I put on Twitter today, if it closes down today, and it looks like it is going to close down at the moment, because it closed yesterday around about 122.03, and we're currently 50 points below that. It'll be the 9th day on the trot the market's closed down, and we haven't seen 9 losing days since September 2008. I think it's based on the 5 o'clock London close. So we've seen really weak pounds. But what we've got at the bottom, this is a 10-day RSI. So what it looks at the last 10 days of, in this case, pound against the dollar. It looks at the days the market went up. So if it went up 2 out of the last 10 days, it adds the points gained on those days. Then it divides it by the total number of points lost and gained overall. And what it shows you, it gives you a value, the squiggle you can see at the bottom, we have a reading between 0 and 100%. And traditionally, anything above this line, 70%, the 70% mark, then the market is said to be overbought. Anything below this level down here, 20%, the market is said to be oversold. So this idea of overbought and oversold is basically what the RSI is trying to do, is give an indication that maybe, just maybe, that the current move in the market that we're looking at may be getting a little bit overstretched. So, for example, the last time pound against the dollar was overbought, this is based on a daily chart, we've got to go back to here. We've got to go back to the 25th of Jan, and you can see, hopefully you can see that on your screens there, the RSI just poked above that 70% level. Now the market did go on to poke a little bit higher over the next week, but it did eventually mark an important turning point for the pound against the dollar. So that was a suggestion from the RSI, okay, it's getting a little bit overcooked up here. Do you really want to be a buyer? If you really want to be a buyer, maybe you wait for a better price, or maybe you think about selling short. And then prior to that, the oversold signal was down here. So this is over, 15th, 16th of Jan, so over a couple of days. The market, again, dipped very briefly into this oversold level, and it did mark an important turning point for the pound against the dollar when it slipped back to that 120 mark. So even though I'm a bit skeptical about lots of technical analysis, I think if you start off looking at things on a daily chart like this, it can still give you maybe a feeling for the heat of the market. The problem is though, because there's no perfect system, right? So what we're looking at here, if we go back, let's go back to September last year when the pound was really selling off. I think when we had that flash crash, didn't we? So the RSI was oversold on this day here. That's October, 4th of October. So if you were looking at this in isolation, you think, oh, my little RSI has gone oversold. Now, if you'd have been tempted to be a buyer back then, you'd have been a buyer at about 127.30. That was the close. Lo and behold, over the next couple of days, the market went over 700 points lower. It's pretty painful. So, like all of these things, it's not a holy grail. It's not a magic system that predicts tops and bottoms, you know, but it can give you a feeling, a way of maybe taking the temperature of the market. And it's interesting, I thought I'd start off on this chart when we were talking about RSIs because of what the pound has done over the last few days, because we have seen this continuing weakness, and it looks like, is it today? It's probably just today it's dipped into oversold. So it's interesting, I think, for a couple of reasons down here. If we do a little bit of analysis, you know, we know that 120-ish is a big level from Jan. So lows for the year are about 120, and it looks like the lowest price for quite some time. So 120 is a big level to watch. The RSI has gone oversold. So me, if I was looking at that, I think, okay, we've had this decline, we've had this downtrend, but with this big level coming up, 150 points away, with the RSI now going into oversold, do I really want to be a seller? You know, how much weakness, according to what we've got in front of us, is left to come? I mean, who knows? But it's a way, I think, of taking the temperature of the market. So it's interesting down here, and I think the pound against the dollar is always an interesting one anyway. I think clearly all the House of Lords, the Brexit stuff, clearly taken its toll on it in recent days. But there's our level, there's our big support level coming in. So another way of using the RSI, because like I say, you know, one of the problems is if you followed it blindly, it would get you to go against a major trend far too quickly. So the RSI would be overbought, so you'd be selling, but the market carries on going higher. RSI is oversold, you're buying, the market carries on going lower. So it's a dangerous one to trade, I think, just in that way. But something that people look for is this idea of divergence. And I think this is another interesting one, and I think we've got at least a couple of examples here. Let's just go back to this late Jan move. So in January, pound against dollar rallied from 120 up to about 126.5. The RSI was overbought, so you can see it there, RSI overbought. What happened over the next week? The market sort of faffed around for a little bit, going a little bit sideways, but did poke higher beginning of Feb. So 2nd of Feb, the market poked its nose a little bit higher. But you can see what we've got here. The RSI has lost interest. So the RSI is falling away. So this little setup, this is known as bearish divergence. So it's where the market hits a level, pushes higher, but the RSI is falling. So these things, these sort of setups, this divergence is not as common as just the overbought, oversold signal. So for many people, they are thought to be a lot more reliable than just straightforward overbought, oversold. And I think that's probably the only real example. We've got a little bit back here, I suppose, a tiny bit here from December, where the market hits a high, RSI hits a high, market pokes a little bit higher on that candle there, but the RSI is going lower. I can't see any particularly fantastic ideas of bullish divergence. I suppose at a push, we could call this move here that happened during December and the first couple of weeks of Jan as bullish divergence of buy signal. So the market pushes to a low here, RSI is oversold. Market does rally a little bit, but then pushes lower, continuing that downtrend, but the RSI has made a slightly higher low. So it's almost, so I think the best way of spotting divergence is almost where the RSI is moving against the trend of the market. So we could draw our trend line here going up, even though the market trend is going down. So I think it's an interesting one to watch. Let's just flip over to an hourly chart. We're looking at dailies now. We'll get much more signals on a shorter term chart. So what I tend to use, I use a 10 setting for the RSI. So a 10-day RSI. Last couple of weeks, again, as ever, I don't think there's any real hard and fast rules. as to what you should use, but that's something that I use as a default. It's interesting, the pound has been so weak over recent days that we've not had an overbought signal. It's not managed to rally into the overbought zone since the 3rd of March. So that really does give you a handle on just how weak this market has been. So if you were looking at the hourly charts, looking to take your sell signals off the RSI, you'd have had one back then, and a very good one it was as well. If you were selling up here, stops above the previous high somewhere, and the market has dumped, what, 150 points off that level, but you've had nothing else since then. You know, it hasn't got anywhere near. It's struggled to get past the 50% level on an RSI reading. So that shows us really how weak the market has been. If you'd have been taking the buy signals in the downtrend, you'd have been getting mullered, I think, is the professional name on the way down. There's even a bit of bullish divergence here, quite a bit of bullish divergence actually. Let's see if we can draw our little trend line there, freehand line. Let's see. If we drew, I don't know, something like that, I suppose. There we go. We've got our RSI going up, up, up. We've got the market going down, down, down. The market didn't really care that we had bullish divergence on the RSI. The market carried on sliding. So there's an example there where the bullish divergence didn't work. But you can see it's interesting that you know, if we look at that March the 3rd overbought, we've got to go all the way back up to the highs, sort of 125.60. From the 3rd week of Feb, so that's giving us a reading as to how weak it's been. So I think it's an interesting addition. You know, I am a bit of a skeptic with a lot of these additional technical indicators. You know, I qualified as a technical analyst more than 20 years ago now, and I've seen a proliferation of these things over the years. And I think there is a tendency for those new to trading and those new to looking at charts to thinking, if only I tweak my stuff, I can get the perfect system. It's not going to work, but I think as a way of taking the temperature of the market, a simple oscillator like the RSI does have its place. So let's have a look at a few more markets with the RSI. But for now, just to wrap things up on the pound, it's interesting it's been so weak. We've got a big level coming up down here around about the 120 level, 119.85, 120. Let's see how the pound performs down here. Clearly, Philip Hammond is doing the budget today. I don't think there's anything particularly shocking that's going to come out of today's budget. I've often sat there when I used to work for a couple of betting companies, sat there watching the markets over the budget, and it's just like watching paint dry. But we'll see. Let's see a bit later on this afternoon if it has any sort of impact. But clearly, I think all the old the Brexit discussions in Westminster taking a toll on the pound. So that's it. Big level to watch coming up. Let's have a look at just a couple of other things, a couple of other currencies. Let me go back to my watches. Euro sterling. We've been watching this one for ages, and it's finally got a move on. So euro sterling, not surprisingly, with the pound being weak, we're seeing euro against the pound has got a bit of a move on in recent days. You know, and I think the argument or the levels that we've been looking at for a while on euro sterling still is valid today. You know, if we had the move off the referendum, a little bit of sell-off after that. There's our one big level coming in there, about what, 82.50, and this level has been done a really good job of holding the market up. This whole 82.50 to 8400 area has been important support. We're currently trading at 86.70. You know, I still think for me that the short-term target is still for a move up above 88, and maybe we'll see a move back up to that 92 level a bit further out. But again, you can see our RSI a bit scrappier, I think, on euro sterling, but over here, say the last peak, okay, the market's getting a little bit overheated, never quite dipped back into the oversold zone on the RSI, giving like a pure buy signal. This is on, let's flip it over to a daily chart. I mean, the daily chart there, that is a daily chart, isn't it? Yeah, let's have a look at an hourly chart. I think I've managed to freeze the charts. There we go. And you can see that just the run in euro sterling we've had this great trend running away. Now it's finally got a move on, thanks to the weakness that we're seeing, excuse me, in the pound against the US dollar. So our trend, euro sterling trend, just chugging higher, looks something like that. And I suppose if you wanted to, this is on the hourly chart, you could use any dips in the RSI towards that oversold level as an opportunity to buy in. Does that look like a head and shoulders, someone said? On the dailies, I suppose you could do. Again, I'm not a massive fan of patterns. I think I'm probably one of the most skeptical technical analysts out there. I'd like to stick to trends as support and resistance. I suppose you could say potentially it's a complicated complicated head and shoulders, I think they call it, where you've got two shoulders on that side, then the head, then potentially if this fails and comes down, two shoulders over there. I mean, the thing would be, I think if it broke this sort of 82, 82.50 area, we could see a bigger sell-off. But I think for now, the trend for euro sterling is still up. So there we see it chugging away. So I suppose if you thought this was going to go higher, where would you put your stop? For me, the most aggressive stop would be under the late yesterday low at 86.52. That's only 20 points away from where we are now. But then we have all these other levels left from the previous day's lows, which I've talked about before, and we'll talk about on one of these webinars in the future. We'll do a little bit more strategy on that. But plenty of support levels if euro sterling does start to turn lower. So interesting stuff. I think it's going to be an odd couple of days. Tomorrow we've got the European Central Bank decision on interest rates. That's at 12 o'clock tomorrow, with a press conference after at 12:45. And in that, there can often be lots of volatility off the back of that. No changes expected to euro interest rates, but we can see quite a bit of volatility. Then on Friday, we have got the non-farm payrolls, of course. The US unemployment numbers come out on Friday, 1:30 UK time. I think it's something like 190,000 jobs were expected to have been added to the US economy in February. And that's, always a volatile time. So we could see, for today, maybe a little bit of marking time, I think, for these markets until we get these big announcements out of the way. So that's pound against the dollar and euro sterling. Euro sterling going up, not surprisingly, because the pound's been so weak. Let's take a look at another currency. We'll go. We'll move away from sort of this part of the world, and let's take a look at the Australian dollar, US dollar. Have I got it in my watch list here? Let me have a quick look. Maybe I need to add it in. I think I've got a couple of accounts that I do this with, and I think I'm using a different account that I haven't got such a broad watch list on, but that's no problem. Let's add it in. So we're going to go for Aussie dollar, US dollar. There we go. Add it to watch list. Perfect. Okay. This is interesting because it's been a bit dull, the Australian dollar, US dollar. Let's have a look on the dailies. Here we go. We've had this run since December. It's quite a big run, and we've been watching this for a while, and the whole discussion has been is the major trend, are the moves that we saw for much of last year the start of a reversal of this downtrend from late 2014, early 2015, and it's been promising, but since April last year, so for 10 months now, it's really struggled at this 78 area. So we've seen rallies up to it. We've seen the market get knocked back, and yet again this time round, up briefly above 7,700, and then it's got knocked back again. But I think it is interesting because there does still appear to be an appetite to be a buyer for the Aussie dollar, US dollar, and you can see again if we refer back to our RSI, it's worked pretty well here. If you were patient and you waited, I don't know, maybe for the RSI to turn up, they do tend to work well if we have sort of quite rangy, wide markets. So up here at the top, going back this time last year, we had the market pushing higher and our RSI falling away. So we had that bearish divergence set up. Then the market was slipped lower, but the RSI was sort of flatlining. So maybe a little bit of bullish divergence there. Then various peaks along the way. And since we've been sort of knocking our head up here, we've had a bit of a mixed signals of the RSI. But it was, it's been overbought back in early Feb, the market did push higher, and now with the weakness we've seen, it's pushing down towards the oversold level. So I think there's a couple of ways I think to play this one. We've seen on the Aussie, I think for the longer term trader, we've seen what a problem. This sort of whatever that level has been, 78.30. 77.80, that sort of level. So if we saw, so that's what, a couple of hundred points, 200, 250 points above where we are now. If we saw the market rally from here, if you really want to go short the Aussie dollar, you've got a definite reference level for where your stop loss is going to go. So I think it makes it an interesting level. But if you thought, well, actually, and this would probably be my bias at the moment, even though the market has sold off, we did see quite a few sell-offs from this level and an attempt to regain the level. So I think we're only seeing, quite possibly the first sell-off since this rise. So I think, well, maybe will we see it have another go at attacking that sort of 7,700, 7,730 level. And again, if we stick with this week's theme of the RSI, our RSI is trickling down. It's not gone oversold yet. But again, if we were watching this and thinking, well, maybe if we see a bit more weakness in the Aussie dollar, our RSI is going to go oversold. We could see a run back up. So I think it's an interesting one. I think for maybe the bottom fishers, because we've got a logical place for our stop loss. Let's flip it over to an hourly chart, and you'll see. Here we go. So we'd had the market, going sideways for ages up there. So on the hourly chart, the RSI is oversold because clearly it's using different data. So if you wanted an excuse to be a buyer, the RSI is giving it to you at the moment. So the market early March did dip as low as 75.40, managed to rally about 80, 90 points, and has been clobbered all the way back down. So I'd say for the aggressive trader, there probably is a trade here, and the trade is to be a buyer at wherever we are, 75.59, with a stop loss the other side of this low from early March. I'd say that's the aggressive trade on the Aussie dollar. The more conservative trade is to put your stop loss somewhere back below these lows from late Jan to give the market a bit more wiggle room. But I think it's interesting that the Aussie dollar has got clobbered back to these levels. We've gone over, so this is on the hourly chart, we've gone oversold on the RSI. So you'd say, well, if the market's going to bounce from anywhere, maybe this is the place. But I would caution that with the next couple of days, with the payrolls out on Friday, we could well see not very much going on until they're out of the way. We could just see markets a little bit flatlining. Let's take a look at stock markets, because lo and behold, I think the US stock market has gone down for 4 days on the trot, and they said it would never happen. So after all these incredible rises, we have seen US markets weaken a little bit, but it's nothing. Let's take a look. So let's build it in. We'll have a look at the Dow and, of course, the S&P. And maybe the S&P is the better one to look at. So let's bring it up. So this is, of course, the broader US stock market. So S&P 500. Let's take a look at the dailies first of all. Let's get our big picture view. So just to put it in perspective, that's this 4-day decline in the US stock market. Yeah. So I don't know. Maybe you want to call a top for a few years based off that, but I would wait a bit. I would wait a bit. So I think at the moment, we've got to treat this as maybe a buying opportunity, but it's all a question, as usual, how far is the sell-off going to go? But look at this. Look at the RSI. Going back to our RSI. Let's say you've been trading. You had a trading system built around RSI signals. You'd have been short the S&P since about here, since 23.17. And the market moved another, what's that, 80 points higher, so probably about 1,000 Dow points higher. So it does show, I think, how markets can stay overbought or oversold much longer than you're expecting them to. I think, is it the famous Warren Buffett quote, markets can stay irrational longer than you can stay solvent. So we've seen, the RSI very overbought and just sticking up there as this market pushed higher. It has moved out of the overbought zone, which again would give us an argument to maybe think about being a buyer. The market has cooled off a little bit. Let's plonk our trend line on the S&P. So I would still treat this weakness as a buying opportunity. The market's been just going almost vertical since the election. We're coming off all-time highs. It's only 4 days worth of weakness. Let's look at some levels that we might want to consider. So let's flip it to an hourly chart for the S&P. Here we go. So let's take it out. So that's our hourly view of the S&P. Now, for me, there are some really obvious levels to start watching out for. The RSI looks like when oversold in the overnight market, and we have held there. So I would suggest. So for me, I still think that major trend is up. So the only question is for me, right? I want to be a buyer. But how far could the weakness go before the market turns around? You could argue the correction from those highs, those March the 1st highs, the correction from those highs is still in place. So if you wanted to sit on your hands for a bit, that's a perfectly sensible and disciplined thing to do. But I would say when it comes to looking at levels, for me, it's all about the levels that have been lost or left, sorry, on the way up. So first of all, S&P, big support down here, 23.58 at the lows from February the 28th, which was the springboard for a move out to fresh highs, and even bigger support. Actually, if I take it from back here, Feb 21st, so I drew that in completely the wrong place. Where is it? Horizontal high low. So I was trying to pick up on those lows down there. There we go. I can't do it. So these lows down here ahead of sort of 23.52, 23.51. So the point is, no market moves in a straight line forever, although US stock markets have done a good impression of moving in a straight line for what seems like forever. But when we get these sell-offs, we are expecting them just to be sell-offs unless we see a break of some major levels. So I think on the S&P, the whole 23.50 to 23.58 area is a really interesting one to watch. And for me, it would make the argument to look to be a buyer over the next couple of days. But again, maybe you want to wait to get the payrolls out of the way. Maybe if it ends up being a shocking payroll number, maybe we'll see a bit more of an exaggerated reaction. But for now, I think there are some big levels to watch on these markets just down here. And of course, just very quickly, if we look at the Dow, it's a similar sort of pattern. We've seen the market go, not quite parabolic, but up like a maniac. And we've left some big levels on the way back. On the way up, we left some big levels sort of back down here, 20,700 sort of area, held the market up the last week of Feb. The market's currently 2,900, 200 points is nothing on the Dow. So again, I'd be watching for the potential for a bounce in these US stock markets after the 4 days of weakness we've seen. And just one quick look at a European market, German 30, not surprising. They're all following the same thing. What's interesting in the DAX, I put this on Twitter about an hour and a half ago. I didn't buy it because I thought I need to concentrate on what I'm doing for this webinar, but it got clobbered. Look at that. The DAX got clobbered at about 20 past 11. So it was trading around about, just below the 12,000 mark, and just fell off a cliff back to 11,940, fell 60 points in 5 minutes. And I put on Twitter, is this a buying opportunity? Because we've got the lows for the day in the DAX. The reason I noticed it, I've got a follower account with Aondo, so I follow at the moment. I've been blogging about it. If you go to my website, tradeafter.com, I'm following a couple of traders, and they're both DAX traders. And I just noticed that suddenly the P&L reversed on the account, and I thought, what's happened? It's got to be the DAX. And that's how I picked it up. But we saw, it's interesting that once again, and I'll talk about this in a later webinar, those lows, the opening lows, 8 o'clock this morning, have held. So the market got clobbered back down towards these lows, and we've bounced back, 30, 40, maybe 50 points actually off these levels. So I thought that was an interesting move. But looking at the DAX on the hourly, it has almost started to stabilize, over the last, what's the date today? The last 24 hours or so. It was the last couple of days. We had a low made earlier in the week on Monday ahead of 11,900. It's dibbled a little bit lower in the overnight market, but the DAX isn't losing ground as fast as the US markets have been in recent days. So as ever, stock markets remain interesting ones to watch. Now to finish things up, now this for me is an interesting one. Gold. Now gold, we've had this great trend all year in gold. Let's flip it out to the dailies. So I'm still bullish on gold this year, but we have seen at the moment we are seeing quite the reversal in gold. And as usual, the question is this a reversal or is this just a buying opportunity? I'd still be sitting in the buying opportunity camp at the moment, but I don't think I'd be buying it just yet. So that was our trend in gold for this year. So I think if you're looking at this a week ago, which I'm sure we were, any weakness for me was definitely a buying opportunity. We faffed around the trend line, but this week it's really lost ground. It's given up something like another $20 over the last 3 days. So I think it's really interesting. The RSI is heading towards oversold, but with the normal caveat, just because it goes oversold today or tomorrow doesn't mean it's going to bounce back. Look what happened here in November last year. It was oversold here, and the market just fell another $100 before turning around. So it's I think it's an interesting one to watch. But let's look at the hourlies for some levels. So for me, okay, that trend has been lost, but it doesn't necessarily mean we're going to see a much bigger reversal. Let's have a look at the 4-hour chart. Let's get a bit more data up here. Here we go. Let's scroll this out. So we're going back to these December lows. For me, is when that trend started. So if we take it off the December lows, a trend looks something like that. So that trend has definitely been cracked. But there are big levels of support, and I suppose for me that the ultimate, from a short to medium term trading point of view, the ultimate gold lows are here. So 1175, let's say. So we sort of faffed around a bit in Jan, middle of Jan, came back down to end of Jan, then that was the springboard for a move higher. So it's still a good, what, $30 odd, $37 below where we are now. But personally for me, I'd be looking for a snapback in the price of gold and a move back up to test these highs. But at the moment, it's a market that is undeniably weak. We're looking at the 4-hour candle here and the 4-hour RSI. Let's flip it over to an hour and see if the RSI is giving us anything. Okay, well, we've been oversold on the RSI since yesterday, 2 o'clock yesterday. And the market sort of faffed about. You could argue we're building up some bullish divergence, but at the moment the market doesn't care. The price of gold is still slipping down. So I'd be, again, I think maybe the sensible thing to do here, let's wait and see if this downtrend manages to get cracked. If we see a half decent rally on gold, $10, $15, we'll crack this correction, and I think that's when we can start looking to be a buyer. But I think it's an interesting market because it has been so strong this year, but been, I think, particularly weak over recent days. We have seen, half decent sell-offs before on the way up, but I think this looks like to be the biggest one this year. So I think gold is an interesting one to watch. I still think it'll snap back, but I think this is one at the moment where we definitely want to sit on our hands and maybe wait for that slide to correct itself. So to wrap things up on our sort of new format of Market Outlook webinar, pound is interesting because it hasn't been this week a day in, day out for 9 years. So if it closes negative today, it's the worst run in the pound since September 2008. It is oversold, and we are approaching what was a big level, the lows from the year. Let's see what happens. Euro sterling's doing well because, of course, the pound is weak, and the Aussie dollar is interesting. After being boring, it's broken lower, but there are some big support levels below. So maybe we'll see a bounce back. Probably the more interesting markets, I think, are the ones we just covered. Those US stock markets, because we have got so used to them going up every day, to have 4 days of weakness is suddenly headline news, but it doesn't really change the big picture since November last year. So I think it's interesting to track those US markets and see if they can find their mojo back again. And this one, the price of gold, because we have seen that great trend since last December. It's come under pressure in the last week, but still plenty of support, not a million miles and pockets of support down here. So I think for me, gold and the stock markets are the interesting ones to watch over the days ahead. Okay, what we're going to do, we are going to wrap things up there. So thanks very much for coming along. Next week, we'll do a similar sort of thing. We'll do like 10, 15 minutes on strategy. I can't remember what we're doing next week. I think it's sort of price action trading off lows. No, it's not, spotting trend reversals. I think that's the theme for next week. So we'll do 10 or 15 minutes on that. Then we'll take a look at, I'll pick out 5 or 6 markets, take a look at that hopefully could prove interesting. But for now, we'll wrap things up. Any questions, drop me an email. My email address is there, david@tradeafter.com. So drop me an email if you want. You can follow me on Twitter for interesting charts now and again. And I'm at Jones the Markets. And to find out a bit more, I've been blogging about this real account with social trading. I've done a couple of updates. I think it's up about 1%, maybe 1 or a bit percent. But if you go to tradeafter.com, you can see it there. But that's it for today. Enjoy the rest of the week, and don't forget it's the payrolls on Friday lunchtime, so we could see a couple of days of boringness and then the usual burst of volatility on Friday when that happens. But hopefully see you next week.